So Tom was talking about mergers. I'm going to talk about breakups. My curious and quirky topic for this month is something that Tom and I have been watching unfold for a long time. It's GE's great breakup. I picked up my copy of the New York Times on December 6th, where GE had created this huge splash in the paper. They were the only advertiser for that full day, which apparently is highly unique. Anyway, they were announcing how focus can take us further. You know, it's kind of weird because GE has been the poster child of conglomeration, and now they're breaking into three public companies. One is GE Aerospace. The second is GE Vernova, which is power and renewable energy. And the third is GE HealthCare. So their mantra is the power of focus. So what does this power of focus really mean, and what does it mean to your business? The General Electric Company was founded by Thomas Edison in 1892. And over 100 years, they told investors that their strength was in diversity. And they continue to grow and become major players in banking, plastics, appliances, healthcare, energy, even cable and television with NBC Universal. And they gained a market cap of over $600 billion by the year 2000. So, and they had built this reputation because they're known for having best practices in processes and discipline. And they had a systematic way for them to prioritize industries and then buy companies based on those priorities. However, in 2008, there was a huge financial crisis, and GE had to start exiting industries and selling off a lot of their businesses, including their iconic brands, which was the lighting and appliance businesses. So by the end of last year, the company posted a net loss of $6.8 billion. So given this, they had to make some pretty significant changes. Now, GE isn't the only large industrial company that has broken up recently. For example, in 2018, United Technologies Corporation, or UTC, also broke into three independent companies. They had the aerospace firm named United Technologies, an elevator and escalator company called Otis, and an HVAC and fire securities company that is now called Carrier. So this was fairly straightforward for UTC because they were a house of brands. And when they split up, each of those different companies were able to take different brands. Now, this is a little bit trickier for GE because they are actually a branded house. What that means is that GE is the umbrella brand for all the businesses. And now that they're completely breaking up the core, they'll have three separate companies that are all keeping the GE brand, in addition to the other companies that they had split off that had maintained the rights to the GE brand as well. So GE's Chief Marketing Officer, Linda Boff, said, over the course of the last 6 months, we've engaged in a thorough customer-led process to understand the intrinsic value of the GE brand from our plan for our planned future companies. And it became clear through, based on data and analysis of 1,000 conversations, that the GE name and our company monogram represents a legacy of innovation, a symbol of trust by the global customers, pride for our team, and a talent magnet for future leaders. So we're proud these future businesses will be able to take and build on GE's DNA of innovation. So this is what Linda Boff said. However, I am very skeptical about this brand strategy moving forward. Usually when you have a brand, it's highly protected and nurtured like a baby. And I'm not sure how GE's brand will be able to maintain its strong equity with so many independent companies that are going to be allowed to impact that brand. You know, will one of the companies go rogue or have some type of dilution to the brand? Will GE have some type of a branding czar where they manage and monitor the brand? So what does this mean for your business? Probably there's three things. One is, are you a house of brands like United Technologies? Or are you a branded house like GE? And if you are a branded house, it may be more difficult if you do any kind of a breakup or a sell-off. The second thing is, are you waiting for a significant external event to occur like a recession to force you and your group to make some of the tough decisions that you might be able to be more proactive and make those decisions earlier? And then the third is, are there industries or markets or customer segments where if you place greater emphasis and focus there, that you'll be able to grow even more in 2023?